And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
love to expose everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl?
Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done. but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is the spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
mean to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
Will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets, rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is a brand.
You had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
You want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard. but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement at the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior, and we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent, with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week.
There's high demand for companies to buy, but the supply of companies to buy has not necessarily kept pace.
Insight from the reporters and editors who bring you America's most trusted business magazine.
Hedge funds are back on top. Now they're basically at par with private equity for the top spot.
Plus, global business, finance, and tech news as it happens.
The most familiar names, the ones you read about the most, are all the tech guys. They're the ones making all the money.
Tesla doesn't own the future.
Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Yes, indeed, everyone. Live from my home in New Jersey and from our Bloomberg Interactive studio in New York, streaming on YouTube. It is Monday, August 10th, 2020. Carol Masser, along with Alex Steele.
Hey, Carol.
It is so nice to have you here.
I haven't seen you in like forever. You're like a real person on my screen.
I am a real person, kind of in that little box, right? It's so great to have you here. It's not exactly a quiet Monday, is it?
No, I mean, maybe trading-wise it feels like it, but news flow-wise it does not at all. From the company level to the macro to what's happening with China, U.S., and stimulus, it's all over the map.
Yeah, we got lots to cover over the next few hours. So let's get everybody going with a check on the trading day. Here is Charlie Pellet.
Hi, thank you very much. And here's what's going on. Happy Monday to you both. We've got stocks trading mixed right now with the Dow, the S&P, they're both higher. NASDAQ is slumping. Let's begin there with technology stocks. NASDAQ down 46 points now. That is a drop of about 0.4%. S&P's up 6, higher by 0.2, and the Dow is advancing 307 now, up by about 1.1%. Stocks are mixed as investors sell high flyers that drove the latest rally and almost pushed U.S. equities back to records. 10-year down 2/32 with a yield of 0.57%. We've got gold down 0.2%, 20.31 the ounce right now. West Texas Intermediate crude up 2.4% right now, up $1 a barrel at 42.21. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. We do want to get into the agenda. Right now, Alex and I were just comparing roots because I haven't had my hair done in I think it was December of last year.
No, that's December.
No,
Wow,
okay.
it
Maybe
looks
it was
pretty
March.
good.
Well, it's a lot of shadows over here. All right, let's talk about what's going on in the markets. Let's set the Business Week agenda. Joining us to do that is Dave Wilson, stocks editor at Bloomberg News. He's on the Access line from New Jersey, along with Yelena Shaletyeva, our senior U.S. economist at Bloomberg Economics, on the phone. I believe, are you still in Long Island or are you in New York right now?
I'm in Long Island.
You still are in Long Island. Do you have power?
Yes. We did get power over the weekend back, but it was more than 4 days without electricity, which was pretty tough, let me tell you.
Yeah, I can only imagine, especially with a little one. Hang on for a second, Yelena. Let's bring in Dave. Dave, talk to us a little bit about the trade today.
I mean, my power was only out for 30 hours last week, so I guess I got off easy. And you could argue the market's kind of getting off easy at this point, too, because, you look at technology companies, which have been sort of the mainstay of the market's rebound going back to March, and they're just not delivering today. It's technology that's down. It's communication services. Think, Facebook and Google's owner Alphabet and a bunch more companies there. Healthcare stocks also lower. That's 3 out of the 11 main industry groups in the S&P 500. The other 8 are all up. And it's, commodity producers, energy and materials, and also industrial companies leading the way. I mean, and if you wanted to point to one area of the market that's definitely kind of helping things today, you look at the casino owners because, you had this disclosure earlier today that Barry Diller's company, IAC, had accumulated a 12% stake in MGM Resorts, and now those shares are up about 12.5%. And you got Wynn Resorts up more than 9%, Las Vegas Sands up about 8%. So put it all together, the casino stocks are doing relatively well. And, you've got that going on. And some of the other travel-related shares also rising. Royal Caribbean, which actually reported a $1.6 billion loss for the second quarter, is up about 9% as well.
So, Yelena, I'm interested in that. That's the micro. From the macro, does the market care about what President Trump did on Friday with the executive order? What's the real economic impact there if we can't get a comprehensive deal?
Well, a comprehensive deal is still needed. The stopgap solution, basically, that's what President Trump's executive orders represent, will not last, will not allow the economy last for more than 2 months, basically. So it will only get us through to probably the middle of October. And in terms of unemployment rates, in terms of unemployment benefits, at least. So simply because the funds that they're using are very limited. So $44 billion in the disaster relief fund will simply be enough for a month and a half to pay those unemployment benefits on top of regular ones in the amount of $400 per week. So I think the broader picture here is that the executive order was a good thing, but it's much inferior to something that would be a bipartisan legislation.
Well, the thing that I get worried about, and Alex, I know you were on air earlier, this morning. I do wonder, the longer this drags on, right? What's the risk for our economy at this point, and that the drop off is deeper and takes longer for us to recover?
Absolutely. I think that the economic recovery is already at risk. There's a lot of uncertainty, and decisive action from lawmakers is simply required to provide this bridge over the pandemic. So we did get a really good solution in the beginning of the crisis. The aid was there, and that's why it didn't become a Great Depression, and it was a real risk of that happening. So now we need this to continue. We need this help to continue. The economy simply cannot do it on its own.
But then you take a look, and then, Dave Wilson, you were just talking about that Royal Caribbean, MGM, Wynn Resorts, like all those that were really beaten up are popping today. And what do you make of the disconnect between this macro and the micro? I mean, I have to be honest, a cruise? Really? Carol, when's the next time you're going to go on a cruise?
Can't plan it. I mean, I just feel like that's an environment where it's going to be very difficult for them to get ahead of the virus, right?
Totally. So, Dave, what do you make of it?
Well, second quarter results, you could argue, were less worse for a whole lot of companies. I mean, considering we went into earnings season anticipating a 44% drop in S&P 500 profit, based on what the analysts were saying on a company-by-company basis, now it's looking like 33%. You're not necessarily getting a whole lot of movement in terms of third quarter, fourth quarter, and into next year in terms of projections. But at the very least, you have that going on. And, beyond that, I mean, you got to remember, interest rates are really low. You got to find some place to put your money, and stocks have certainly been the beneficiary of that. And if you figure that these industries that have been beaten up are eventually going to come back, and that's certainly IAC's thinking in going into MGM Resorts, then the shares cost a whole lot less in many cases than they did even a few months ago. So you have that element as well.
Hey, Dave, just quick tease for your chart coming up.
Apple splitting its stock, it feels like a 1990s throwback.
Yeah, it does. There we go.
Is that a hint for the song? Wait, which one do you do the song? I forget.
It's the chart of the day.
Okay, so is this a hint? Because I'm the worst at pop culture of any decade.
Well, Dave is going to tell you, you'll find out that I have become really bad at just Googling really quickly to come up with the song, so it's kind of cheating, I feel like. I know.
I think you might have a shot with this one. We'll
All right.
see.
Good. All right, Dave Wilson, thank you so much. We'll check in with Dave a little bit later on. Yelena, thanks so much as well. It's so great to have you here. I mean, what's your world been like?
Oh man, I mean, being back at work is cool. Like the first week, it's this really weird transition shock, and then you kind of get all your systems in place, like what you sanitize, when you wear your mask, and then it winds up feeling a little normal. So in some ways, my life feels a lot normal now than everyone else. So when everyone else gets freaked out about something, I'm like, what's the problem? And what about you?
It's a little crazy. I mean, I feel like I've been in a bit of a bubble, since mid-March. So waiting to kind of see what the rest of the year is, and looking forward to actually my daughter going back to school, which she, I know, is excited about. So
yeah,
in
person?
In person. A little bit of a hybrid. So we can talk a little bit more about this because I'm curious about your take on that with your little one.
I have lots of feelings.
Okay, yeah, I know, right? Quick check on the Bloomberg Business Week Bite of the Day. One number that tells us a lot. Today's number, a little bit sobering, $4 billion. The recent hurricane, which left millions without power in the Northeast, we just heard that from Yelena, expected to cost insurance companies about $4 billion in the U.S. That's according to some estimates. So we know Yelena, as she said, and we know Jason too. Alex was out of power, so it was really certainly tough here on the East Coast. All right, let's get to world and national news headlines. For that, let's check in with Nancy Lyons in our D.C. studio. Hey, Nance.
Hey, Carol. The head of the World Health Organization, Tedros Adhanom Ghebreyesus, is predicting the number of people infected by the coronavirus will hit 20 million this week, including about 750,000 deaths.
Behind these statistics, there is a great deal of pain and suffering. Every life lost matters. I know many of you are grieving and that this is a difficult moment for the world.
He's again encouraging leaders to impose targeted lockdowns and encourage mask wearing. There is pushback from some states concerning President Trump's executive order asking them to chip in a quarter of the $400 a week for enhanced unemployment benefits. Bloomberg's Kathleen Hunter says the states already are dealing with budget shortfalls.
State governments have to balance their budget. They can't do deficit spending. And so there is a real concern out there among some governors. It's worth noting we heard mostly and most vocally from Democratic governors. But there is a concern that the states don't have the same kind of resources as the federal government to be able to do this. And so it raises the question of, who's going to pick up the tab and whether or not people will actually get this sort of benefit that Trump's obviously going to claim credit for.
The administration is canvassing states to see which of them will be able to pick up part of the tab. Change is happening in Lebanon with the entire cabinet resigning over last week's deadly explosion in Beirut. People have been flooding the streets in protest, demanding accountability for those who let explosive materials sit in the city's port for years. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week on this Monday. Carol Massar along with Alex Steele, and Man, we got the news last week, Alex, about New York City schools. They're going to open in September. More than 700,000 students will participate in a blended schedule of in-school and online instruction, according to New York City Mayor Bill de Blasio. So I know my daughter, that's exactly what she's going to be doing when she goes back to school. What about your daughter?
So she'll be 6 in September, so
6.
going to first grade. So
Wow.
we signed her up for hybrid,
Mm-hmm.
but it was really agonizing because all of her friends are doing remote only. So she's not going to get to be with her friends. Like, she has some like second tier friends that she'll be able to be with, but like her besties, she's not going to be able to be around. And it was really like heart-wrenching. I also have a friend who's a public school teacher, and she was saying that they just wish that there would be a plan, that they would be told what to do. And then they submit a plan on how to reach the plan. But it was like an A and a B and a C, and you submit a C, and it got so confusing for the school, and they wasted so much time coming up with plans that then got rejected.
Right.
That now they're all behind to try and scramble to get things ready.
Yeah, and really frustrating as a parent. I know we went through some of that back and forth too, and I think my daughter's school was, kind of reaching out to us, kind of what worked well with virtual learning, what didn't, and I think they're trying to figure out, especially for the younger kids, how to get them back to school because they realize it's really hard for younger kids to learn virtually, and I think they're going to try and bring them back as much as possible, and then the upper grades kind of do that hybrid because they feel like that they can deal with it a little bit better.
Did you read that article in the Journal over the weekend about how younger kids, like 2 to 6, go through like a pivotal developmental stage that if they can't play with other children during that time, they like could lose the ability to be empathetic? I was like, oh God, that sounds so drastic.
We're hearing this from educators. I mean, a lot of the guests that have been on our show saying like, this is, we need to think about, it's not just about, getting them back and just kind of getting back to normal, but it's about their developmental process, right? And we really need to think about this. And when it comes to colleges and universities, a lot of folks are saying this is our future. And so we need to get these kids back, certainly into learning environments. All right, you're listening to Bloomberg Business Week. Carol Massar, Alex Steele, and this is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks continue to trade mixed as investors sell high flyers that drove the latest rally that almost pushed U.S. equities back to records. The S&P's up 4, little change now, up by less than 0.2%. The Dow is up 1% now, higher by 285 points, while the NASDAQ Composite Index is down 51, a drop there of 0.5%. 10 years down 230 seconds with a yield of 0.57%. We've got gold down 0.3 now, $20.29 for an ounce of the precious metal, while West Texas Intermediate crude is up 2.2%, $42.13 a barrel. Canopy Growth Corp, that's the cannabis company that attracted Corona beer producer Constellation Brands as an investor, is planning to introduce cannabis beverages in the United States after reporting strong demand in Canada. Shares of Canopy Growth, they're up now by 8.5%. Recapping, S&P up 5, up 0.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Yes, indeed. All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with Alex Steele. Jason Kelly is off this week. So checking out some of the headlines when it comes to the virus, we saw infections among U.S. children grow 40% in the last half of July, and that's according to a recent report. And this, as Alex and I were just talking for our New York audience, about there really is a debate about whether schools should reopen in the fall. We're going to reopen here in New York City, but if you look across the country, that debate is certainly raging. Let's talk about the latest on the virus and the headlines he is watching. Back with us is Dr. Sandro Galea. He's Dean and Professor at Boston University's School of Public Health, author of Pained, Uncomfortable Conversations about the Public's Health, and he joins us once again on the phone from Boston. Dr. Galea, great to have you here with Alex and myself. This rise in cases of the virus among children, what should we know about that?
Well, thanks for having me, Carol and Alex. Well, we are seeing cases among all ages, and we've seen a rise in cases in many parts of the country, which has resulted in the highest numbers of cases that we've had any time in the pandemic. Now, our overall numbers are actually starting to go down slowly. The fact that we're seeing some more cases among children is not altogether surprising, given that we are slowly reopening schools and there has been a relaxing of many of the social distancing norms. To my mind, the question we should be asking ourselves at the moment is, how do we balance making sure that we keep people as safe as possible, managing risk as much as possible, and also meet social and economic functions that we need to meet? Schools and school reopening is really important. We know that children do not learn as well if they're strictly in a digital environment. We know that children who are disadvantaged already fall further behind if they're not in school. Now, that does not mean that we should be reopening schools at all costs. It simply means that we should be thinking carefully about how we can get as close to as possible to giving the best possible education while also managing risk.
So there was this survey that went out to all the teachers and said, you know, do you want to return to school? How safe do you feel? And then it was sent back to me as a parent for the public school that my daughter goes to. And then the teacher of her kindergarten class followed it up and said that she didn't want to go back to school. And I asked her, I was like, so what really is the problem? Like specifically? And I guess what really comes up for all these teachers is the air quality in the classrooms, especially because the majority of these public schools are not well ventilated and they're super old buildings. They have those bars on them, so it's hard to even get like an air conditioner in there. What can be done to fix that in a realistic kind of way?
Yeah, no, it's an excellent question, and I think there have been a number of teachers and teacher organizations who have had concerns, and these questions are very school by school and district by district specific, because certainly there are any number of districts that have the capacity to upgrade the schools or have newer buildings and other ones that do not. You know, the answer really depends on the school. There's nothing magical that can be done, but each school needs to have its ventilation inspected, its airflow inspected, the physical layout inspected. And to my mind, it's not unreasonable to say that any number of schools are reasonable and safe to open and some may not be.
But it's interesting too, Dr. Galea, that I do wonder, certainly many are saying we're going to have more viruses akin to what we're dealing with now in the future. So do we all need to look at all of the air systems in schools, in office buildings? Do we kind of need to rework them, rethink them?
I think in the long term, we have learned in this moment that we definitely need to do that. And it seems to me one of the greatest tragedies of this moment will be if we do not learn from it. We certainly have learned that we need to make sure that we have proper airflow and ventilation in all buildings to anticipate events like this. In the short term, I think we do need to look at building by building, case by case basis. And what always troubles me in the public conversation is the reductionist yes or no argument, with one side saying, well, we must open all schools everywhere, another side saying we cannot open any school anywhere. And neither of those sides are correct. Ultimately, the answer is one of careful, thoughtful approach, looking at the region, looking at the case positivity rate of the virus in the region, looking at the nature of the schools, looking at what the schools can put in place in terms of social distancing, in terms of ventilation, and allowing thoughtful decisions to be made locally, responsive to local needs.
So there's only one right answer for me right here on this question. Do those UV air purifier things work? And you have to say yes.
well, given that you know what the answer should be, I feel like...
No, seriously.
Is that what's in your schools? Is that what's going into your schools?
No, that's what I want to put in the school classrooms. I was emailing the principal about it. Anyway.
I am not aware that the evidence is such that most of those work in isolation, no.
Oh, wow.
I'm sorry.
So what kind of system do you need?
Well, you would need environmental engineers to talk about the specifications for that. My understanding is that fundamentally what you need is reasonable airflow. And different schools and different, for example, subways and planes, they're designed with different capacities for that. Fundamentally what you want is that aerosols are not hanging around. They're not lingering, right? We now know that the virus is transmitted via aerosols. So essentially, if somebody coughs, somebody sneezes, the virus is going to stay around for many seconds, many minutes, many hours. And what you want is you want to have airflow so that the virus then moves on. And that is very much building by building, structure by structure dependent.
Right, which is why people say opening up windows, and they also have talked about airplanes, that the kind of the airflow that comes from down kind of helps to move the air away.
That's correct, and that's why we haven't seen any large number of outbreaks from airplanes, even though airplanes are obviously confined spaces. It's because they have good airflow, and that's also why we've seen relatively few cases that are transmitted in the outside, because when you're in the outside, there is good airflow.
All right, Sandro, we're going to continue the conversation. We're going to do a little bit of news, but then we'll bring you back. We're going to continue with Dr. Sandro Galea, Dean and Professor at Boston University School of Public Health. We have to talk to him, too, Alex, about kind of reopening in the fall. And he's also written a book, Pained, Uncomfortable Conversations about the Public's Health. He's looked a lot into the inequalities that are out there and certainly that have been laid bare by the virus. You're listening to Bloomberg Business Week. Carol Master, Alex Steele, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Carol Masser here, along with Alex Steele. We're going to continue our conversation with Dr. Sandro Galea at Boston University School of Public Health. He's going to reopen his school, too. I got to find out what he's doing, Alex.
Oh, that's a good call. I didn't even think about that.
He wears a lot of different hats. Exactly. All right, we'll get to that in just a moment. Let's get back to your top business stories. A check on the trading day. Here is Charlie Pellet.
Hi, thank you very much. We're looking at a mixed Monday, Carol and Alex, right now with the Dow, the S&P there higher, NASDAQ is lower. Let's begin with a lot of tech stocks because we got NASDAQ slumping now by 47 points, down by about 0.4%. Also lower, the NASDAQ 100 index. The S&P is up 7. That's a gain of about 0.2%, while the Dow Jones Industrial Average now up by 320 points, higher right now by about 1.2%. Stocks mixed as investors sell some of the high flyers that drove the latest rally that almost pushed equities back to records. Crude oil is gaining. The dollar has touched a one-week high. The 10-year yield now 0.57%, down 2/30 seconds. Gold is down $9.50 the ounce at $20.26, a drop there of 0.5%. West Texas Intermediate crude up 1.6%, $41.90 for a barrel of West Texas Intermediate crude. Eastman Kodak shares plunging today after a federal agency announced it was suspending a $765 million loan to help the former film company produce COVID-19 drugs, pending the outcome of investigations into potential wrongdoing. Kodak shares down now by about 29%. New York City has been a coronavirus success story in terms of lowering the number of cases. Dr. Joshua Sharfstein is vice dean at the Bloomberg Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television this morning, he praised the progress that New York has made.
Well, they got right that the virus needed to take priority, that the threat of the virus was practically existential to New York, and that, this was the number one concern. And if they could get this fixed, then other things could happen. And I think that was extremely important, and they conveyed that sense of urgency through all those press conferences and everything else.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Again, recapping equities trading mix. The S&P higher, up 6 now, up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. All right, let's get back to Dr. Sandro Galea, Dean of Boston University School of Public Health. So we'll get to what you're going to do with your school in just a second, but I did want to start about the inequality because Bill Gates was on CNN over the weekend, and he called it catastrophic and mind-blowing how bad testing here is in the U.S., and specifically talked about the inequities of it. Like if you're rich, you can get a fast test and know you're okay. If you're not, then you don't. What do you think?
Well, I think Bill Gates is right. The Wall Street Journal just ran a long piece today about inequities in testing, which I'm quoted in a few times. And the bottom line is that we have been terrible at keeping equity at front and center throughout this entire COVID pandemic. There is no way we can say that we have done anything but poorly when we have such enormous racial disparities in risk of getting coronavirus and risk of death from COVID. And fundamentally, what's been going on is it's a reflection of underlying racial inequities in the country. You are seeing underlying inequities in comorbidities, in prior diseases, in jobs which allow one to social distance or not, and all of that is manifesting in COVID. Now, the testing, which of course is an entirely problem of our own making, adds a layer onto it, that it has become very easy to get a test if you are well connected or wealthy. It's become quite difficult to get a test if you're none of those things. And of course, if you're none of those things is when you are more likely to need a test. So we have created a situation where our underlying conditions has put marginalized people at greater risk. It has taken people who are health left behind and made their health worse. And now, compounding that, we are not making testing available to try to restore health to the group that needs it most.
So what's preventing that from happening, Dr. Galea? Is it just the physical test not being available? Is it not enough testing sites? What's holding it all back?
Fundamentally, you do not fix inequities without paying attention to them. In order to fix something that has been structurally wrong for a long time, you have to say, I want to fix this and I'm going to make an effort. So to come to testing, if you have 100 tests and you say, well, I'm just going to distribute them evenly, what ends up happening is 80 of them end up in the hands of people who have resources already. In order to get 80 of them in the hands of people who don't have resources, you have to distribute the tests in such a way such that people who are disadvantaged are at the front of the line in getting those tests. And we just have not done that. We have not made the effort to say, where are the communities of color? Where are the poor communities? Where are the communities with the highest prevalence, with the highest density of COVID? Those are the ones who need the test the most. And let's make sure that the tests are available in those communities.
Sandro, who do you mean we? Like, who needs to be the folks that say, let's do this right?
Question, Carol. You know, I like to use the word we because I don't want to absolve us. I don't want to absolve me. I don't want to absolve you, because I think fundamentally the decision comes centrally, right? Fundamentally, a lot of these decisions are federal. They come in the FDA and they come from the distribution of tests to the state and from the states to their counties and their communities. But the reason I think we is a better term is because we collectively are allowing this to happen, and we should not be allowing this to happen. And I'm very grateful to you for actually voicing this on your show.
On the flip side, though, there's been a lot of talk about poor and minority populations getting the vaccine, for example, first because they've been harder hit. But there's a lot of controversy around that also, particularly if there wind up being some side effects.
Yeah, no, it's that is going to be a difficult issue. I think it's almost premature to even have that conversation, to be frank, just because we do not know what the vaccines are going to be like. We do not know what their side effect profiles are going to be, what their efficacy are going to be. But whatever we end up with, if we have an efficacious vaccine, we should make sure that the people who need it most are the ones who get it first. And the people who need it most are those who are most at risk of coronavirus. And that means people who are in contact with coronavirus. That includes first responders, that includes people in minority communities, that includes people who are working in jobs where they cannot social distance. I think any other way of distributing vaccine would be unfair.
I was going to ask you about schools reopening, but I feel like Alex went a really great place. We've only got about a minute left, but I do wonder, are we rushing this vaccine too quickly? The magazine this week is going to be all about the vaccine and a hunt for a vaccine, but I do wonder, we don't know really the consequences. Just have about 45 seconds here.
Yeah, we do not. There are two large trials going on, each with 30,000 patients in them. They are. I'm not involved in the design of these trials, but my sense is that they are designed to the state of the science. And as long as we are getting our vaccines, testing them appropriately in large trials, making sure they have a good safety profile and good efficacy profile, I think we should embrace the fact that science has moved forward and we can have vaccines faster than we ever have been able to in the past.
All right. We're going to leave it on that note. Sandro, thank you so much. Dr. Sandro Galea, Dean at the Boston University School of Public Health, author of Pained, Uncomfortable Conversations about the Public's Health, back with us on the phone from Boston. Will you get a vaccine?
Me?
Yeah.
Yes. Will you?
Yes.
I will for my kid. My husband's older, so that too. And for my parents, for sure.
Yeah.
I'd be my dad has Alzheimer's, and I don't know if I want him getting a vaccine, so at least I can be vaccinated around him. But yes, 100% absolutely. But I do worry about the longer term side effects for sure.
Yeah, right. I mean, I do, as much as, they're doing, testing and trials with lots of people, I still do wonder about how quickly we're doing this and the consequences unforeseen. All right, let's get back to World and National News headlines for that. Let's toss it over to Nancy Lyons in our 99.1 studio in D.C. Hey, Nance.
Hey, Carol. President Trump could give his own Gettysburg Address at the GOP convention. Today, he tweeted he'll be delivering his nomination speech from either Gettysburg or the White House. He says he'll announce his decision soon. His acceptance speech and the convention was originally set to be held in Charlotte, North Carolina, moved to Jacksonville, Florida, and then moved largely online. Democrats say their convention will feature speakers from swing states who have nothing to do with politics. And among the themes will be persuading dissatisfied Trump voters to vote Democratic, focusing on Trump mishandling of the pandemic, and discussing reopening of schools. Well, the so-called battleground states are living up to that name in this election cycle, as we hear from Bloomberg's Amy Morris in Washington.
Democratic nominee Joe Biden is leading President Trump in Wisconsin and Pennsylvania, states that the president won back in 2016. The CBS poll shows Biden up by 6 points in each state, with a margin of error of plus or minus 3.7%. Other polls have similar results. Real Clear Politics finds Biden up by about 5 points in each state. In the survey, voters said things in America were going, quote, badly, and that the president's handling of the coronavirus pandemic was a major issue. In Washington, I'm Amy Morris, Bloomberg Radio.
Air travel is down sharply during the pandemic, but airport screeners are finding guns at a much higher rate. About 80% of those guns are loaded. The Transportation Security Administration is appealing to travelers to pay attention to the restrictions on traveling with guns. They are allowed in checked bags if unloaded and in a locked case, but they are prohibited in carry-ons. Global news 24 hours a day on air and in Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Carol Masser, Alex Steele on this Monday, off and running, and fascinating stories in the New York Times about what happens to viral particles on the subway. I guess fascinating and disturbing, Alex. I'm not sure how we should classify it.
Yeah, but it was really interesting the way that they did that, because apparently at any given moment, 75% of the air you breathe in a subway car is recycled and the rest is pulled from the outside. Now, with a few people on the subway, you can make the argument it's okay, but if we get back to pre-COVID levels, even if you're wearing a mask, then you're reaching some more dangerous situations there.
Yeah, exactly. And they talk about ventilation units. Like, I've thought about this a lot on the subway, right? Like, when there's not so many people, I can feel like, okay, there's enough air circulating that maybe it's a safer way. But God, I've been on those trains where we're literally pressed body to body and it's packed. And I don't know how you do that safely.
Totally. And apparently experts say that the indoor spaces upgrade their filters to a level of 13 for these MERV filters, which are a fancy word for basically like how good they are at air filtration. And the ones on subway cars are MERV 7. So we're like, well, not even close to like where we eventually need to be. And by the way, where are you going to get the money to do all that?
Well,
because we're cutting like $1 billion from the budget. Like, you're not going to have the money to do that.
Exactly. I mean, the subway system, right? We know you ride it. I used to ride it all the time. Was in badly need of a lot of upgrades, just generally speaking, right? Systems that hadn't been worked on for a long time. They had a new head, he left, they had new people coming in. But I do wonder, right, with the revenue down so much, will they have the necessary funding that they need to kind of get this up to snuff?
No.
And no.
I mean, I don't know how that's
Are you
gonna
riding
happen.
subways? Are you riding subways?
No, I haven't. I've been, I have a car into work and then I wind up taking a cab home. It feels like it's somewhat more controlled. My husband rode the subway once. I'm not opposed to it if I have to, but I mean, I think it just, you open yourself up for more risk, and for me it's about calculated risk, but I'm fortunate, like I can do a cab.
Right.
So,
right. And we know, again, we just talked about inequalities. There are a lot of people who don't have those options, and makes it really a lot more difficult. All right, you are listening to Bloomberg Radio. And a reminder for all of our listeners working from home and elsewhere, Bloomberg Radio, it's available on all of your favorite apps, Bloomberg Business, Radio.com, iHeart, SiriusXM, TuneIn, as well as Bloomberg.com, and check out the Bloomberg Terminal, type RADIGO.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. U.S. stocks continue to trade mixed as investors sold some of the high flyers that drove the latest rally and that almost pushed U.S. equities back to records. Here's where we stand. The S&P 500 index is up 2 points now, a gain of about 0.1%. The Dow is up 294 points, higher by 1.1%. NASDAQ down again, dropping another 67 points to 10,942, a drop of 0.6%. 10-year yield 0.57%, down 2/30 seconds. Gold is down 0.7% at 2,021, and West Texas Intermediate crude oil up 1.8%, 41.97 a barrel. Recapping equities mix: the Dow, the S&P higher, NASDAQ lower. S&P up now by 3 points, up 0.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Alex Steele. And this week, the magazine is taking a deep dive into a vaccine for the virus. It includes a story on drug giant Merck taking a slow and steady approach. As we know, many of its rivals have really been racing for a vaccine. Let's get into this. And joining us right now is Bloomberg News U.S. healthcare reporter Riley Griffin, joining us on the phone in New York City, and Bloomberg Business Week editor Joel Weber on the phone in Massachusetts. And Joel, this week, as we mentioned, the issue looking at everyone working on a vaccine, with so much going on globally, how did you guys approach the coverage here?
So one of the things that we realized was that there's got to be a bigger story in the world right now, and that's saying something considering, you know, we've seen social unrest, we're about to see an election, but that clearly a lot hinges on. But you know, I think we've all been fixated on everything around the vaccine to the point that, you know, we're all becoming sort of better scientists in understanding how even approaches to vaccines can work, let alone, you know, the trials that all of them entail. So we figured let's look at this on the biggest level that we can, but not just look at it in terms of like the companies and the horse races, so much as all the other things that have to happen around a vaccine. It's like getting a vaccine is ultimately getting a formula right, but you have to get production, distribution, there's politics, there's a whole bunch of other stuff. So we've really devoted a lot of this issue to looking at all these facets. But let's not forget the foot race either, right? The thing that was really captivating about Merck in this context is a lot of the big vaccines that have come to civilization in the past decades have actually come from Merck. And while other approaches are racing, like you said, Carol, to get this thing done quickly, Merck is saying, you know, we're not going to be the first out of the gate, but we know what we're doing when it comes to vaccines. And that's what Riley was able to write about. And Riley, talk to us more about why Merck sets the bar where it sets it when it comes to vaccine development.
Yeah, absolutely. Well, I'd love to take you back a few months, actually, to the final weeks of May when Merck first announced they would be pursuing 2 coronavirus vaccines and an antiviral treatment. To be frank, the news came rather late at the time. The coronavirus had already swept the U.S., and within days of that announcement, we marked more than 100,000 deaths in this country. At the time, though, we were thinking through Merck, which has more than 100 years dominating the vaccine space. It had to have something brewing. In fact, I had spoken with the director of the National Institutes of Health at the time, Francis Collins, who had said to me, "Don't count Merck out quite yet." And I think you'll find that those who know the vaccine world well always hold that opinion. Don't count Merck out, because though they might take a more conservative approach to vaccine development, they have quite the track record, as you mentioned. And to talk about that track record briefly, I mean, Merck is responsible for the first U.S. inoculations for chickenpox, rubella, measles, and mumps. In fact, that mumps vaccine is the quickest to go through. Kids now get Merck-produced vaccines for all 4 of those things. And to top it off, the company has pioneered vaccines for HPV and just this past December, Ebola. And that was the first vaccine ever approved for that virus. So they have skin in the game. They know how to do this work. And even though there are more than 160 vaccines in various stages of development for the coronavirus, 26 of those which have entered human trials, Merck is coming later, but you got to watch Merck closely because they know what they're doing.
So when we talk about like a slow rolling vaccines, like what does that mean? Do they just like do more testing? Is it more trials?
Yeah, so we've spoken with top researchers and executives at the company, and their goal right now is to have global impact. So they started their development process later, but they're taking a threefold approach. They want to have a shot that's effective in a single dose. That's notable because some of the front runners that we see today, they take a 2-dose approach, a vaccine plus a booster. They also want to make sure it can be easily distributed around the world. And last, they want to rely on tried and true technology. So they're employing this kind of old school approach that they have for decades, now augmented with genetic engineering to add COVID-specific proteins or RNA. They've settled on these 2 candidates, one based on their Ebola vaccine, and the other based on an existing measles vaccine. So to put that in perspective in terms of timeline, the measles vaccine is going to launch into human trials later this month. The Ebola trial, meanwhile, will kickstart in the fall. And again, the fall is when we're hearing some companies say they're gonna seek an emergency use authorization. So Merck is just starting some of their human trials at that point in time. One executive speaking in a congressional hearing said we shouldn't expect them to come to market with a vaccine until 2021 at the earliest. But their goal here isn't to be first, it's to be best.
So talk to us more about what that best might look like, Riley, because if they're taking this tried and true, slow and steady sort of approach, we could see other vaccines using different technology come out first and maybe be something that you could see, embraced by first responders, for instance. So where does Merck feel like their role in this marketplace is exactly?
Yeah, their goal is really to bring a single dose shot that generates immunity very quickly. And that's an important point to make because the reality is, even though there are 160 vaccines in various stages of development, we really don't have a silver bullet thus far. There are so many lingering unknowns. How many doses are going to be needed to grant sufficient immunity? How long will that immunity last? Will we need a vaccine every 6 months, once a year, every 2 years? And what populations will it work within? I cover this vaccine race. I speak with CEOs of Pfizer and other front runners, and they're starting to be a little bit more open, a little more candid about the fact that we might end up with a coronavirus vaccine that operates more like a seasonal flu shot that you need frequently. And we don't know who it's really going to work within or what level of efficacy it will reach. Merck is watching this all unfold in real time, and they're saying, yes, there are these unknowns. Yes, these vaccines, it's important to get them out first, but they might be subpar in some ways. And rather than be first to market, they want that 1-dose shot that provides sufficient immunity for a very durable period of time. And so they're not going to hedge their bets on new technology like Moderna, like Pfizer and BioNTech. They're going to turn to this old school technology. That actually is quite interesting, and a question I get often from readers and healthcare folks is why isn't Merck pursuing mRNA like Moderna? Because here's a little history.
Wait.
Merck and...
You know what, Riley? We're running out of time, but this is a great teaser for everyone to kind of check out the story on Bloomberg.com, and I'll put it out on Twitter, and of course, it will be in the magazine because I don't want to cut you short in terms of your explanation, but I highly recommend that this is a must-read for everyone wanting to understand about the race for a vaccine. Riley Griffin, thank you so much. Bloomberg News U.S. healthcare reporter on the phone in New York, and of course, our thanks to Bloomberg Business Week editor Jill Weber on the phone in Massachusetts. For those of you listening in New York, D.C., and San Francisco, and watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. And coming up next right here, we're going to talk a little bit more about the U.S. plans for TikTok. We'll get into that in just a moment right here on Bloomberg Radio.
Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading with the Dow, the S&P higher, NASDAQ is lower, stocks mixed as investors sell off some of the high flyers that drove the latest rally. Chip makers leading declines amid renewed tensions with China. Media shares dropping on speculation about the cancellation of college football. Here's where we stand. S&P 500 index up now by 9 points. That is a gain of 0.3%. Dow Industrials up just about 344 points. That is a gain of 1.3%. And NASDAQ is down 36 points, a drop right now of 0.3%. We've got the 10-year down 230 seconds, the 0.57%. Gold down $11 the ounce, now down 0.6% at 2,024. And West Texas Intermediate crude up 2%, 42.04 for a barrel of West Texas Intermediate crude. U.S. job openings unexpectedly increased in June, and hiring maintained a solid pace as state economies continued with reopening efforts. The number of available positions climbed to 5.89 million during the month from a revised 5.37 million in May, according to the Labor Department's Job Openings and Labor Turnover Survey, or JOLTS, that was released today. Wall Street, meanwhile, still digesting last week's jobs report as President Trump moves to extend special unemployment benefits. Dan Alpert is founding managing partner at Westwood Capital.
The bottom line is that this rapid crash in U.S. employment, which is not getting recovered from anytime soon, threatens to descend further into systemic crisis. We're going to see households unable to pay their bills, and small and medium-sized employers who give jobs to about 50% of American workers failing as aggregate demand collapses.
This headline from the Bloomberg Professional Service: the junk bond market has set a record low coupon with the Ball Corp deal. Again, junk bond market setting a record low coupon. Cruise line stocks, they're sailing higher right now on optimism about Royal Caribbean's bookings. Royal Caribbean up 9.8%, Carnival Corp up 7.6%, Norwegian up now by 7.8%. Recapping, equities higher, S&P up 0.3%. That's Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, everybody, it is Monday. It is Bloomberg Business Week. Jason Kelly is off this week. Carol Masser, and lucky for me, I've got Alex Steele, anchor of Bloomberg Television extraordinaire.
All of television. All of Bloomberg Television.
You could do it. I think there's been days where we've had like snow days, and I think you've anchored many, many hours.
Probably. I probably didn't make any sense after a while, but yeah, sure.
You always make sense. What, you did though. You were on Bloomberg Television earlier today. You guys went through the European close. What was kind of the tone of the markets and just kind of where we are right now in this process?
Well, so I anchor with Guy Johnson over in London. So he really, really wanted to make something out of the fact that the NASDAQ was trading a little heavy and that we were seeing money go into sort of the cyclicals like energy, et cetera, here in the U.S. And he just wanted to make hay of it, to make a story. And it was like, I don't think there's a story. I mean, I think the NASDAQ is now down 0.3%. I think it's a little bit of portfolio rebalancing. But it is something we touched on with Dave Wilson and Elena earlier about how the macro versus the micro is quite different, and how you square that as an investor.
Yeah, I feel like we've constantly been talking about what's going on Wall Street versus what's going on in Main Street, what's going on in some of the economic data points, and trying just to kind of make sense of it. We've also been trying to make sense of the back and forth that continues on between the U.S. and China. And of course, we knew last week, kind of big in terms of President Trump issuing that executive order banning some of those China-based social apps, WeChat and TikTok. So let's continue a conversation that we've had often with Andy Brown, editorial director at Bloomberg New Economy. He's on the phone in New York. Andy, I do feel like, this is something we have talked about, Jason and I, certainly a lot with you, and I know Alex has been covering it. I mean, in terms of TikTok, how do we see it at this point? And the banning of TikTok, it just doesn't seem to make sense.
It doesn't make a huge amount of sense. I mean, the White House are trying to present TikTok and WeChat as being these unique Chinese threats to U.S. national security with the capability of potentially of undermining U.S. democracy. And in one way, it has a point, right? That TikTok actually, it's not just this platform that plays out goofy videos. I mean, it is an enormous data collection surveillance machine. It's collecting all in the United States, drawing up detailed profiles of these people. It wants this data to push videos at them. But of course, it could, if the Chinese government wanted it, if the government wanted it, I mean, it would have to probably hand this data over to the Chinese government. And then there's also the fear that it could use this data, for political purposes, potentially to influence the next election. But the thoughtful analysts are saying that this is not necessarily a China problem. This is a privacy issue. It's a data privacy issue. And TikTok and WeChat are behaving just like their peers in the United States, which are also these, surveillance machines, big brother in your pocket. And the smart, neutral way of handling this would be to better regulate all of these social media companies, not just the Chinese ones, in a way that, is acceptable broadly to U.S. society.
Well, I was going to ask that because I'm really trying to understand what the national security issue is with TikTok privacy in terms of, say, 9-year-olds using it and then having porn images there. That's one thing. But is it that China's going to sow disinformation in the U.S. or try and disrupt commonly held views in the U.S., or is it literally stealing data and then using it somehow against them?
So the Chinese security law basically demands that, if their social media companies are asked for data, if any company is asked for data, they're going to have to turn it over to the government. And I think that's pretty much what would have to happen. You don't say no. If you're a Chinese business or any business, you don't say no to the Chinese government. So that's one level of concern. But the other level of concern is that TikTok actually is inside the hearts and minds of 100 million Americans, and many of them millennials. And there is a genuine fear that if it wanted to, it could weaponize this data for political purposes. But again, this isn't just a TikTok problem. I mean, they are all playing this game, right? I mean, Facebook and Instagram and Twitter, this is the industry standard. And so, people are saying, well, if that's a problem, then regulate it, right? But don't just pick on the Chinese companies.
Right. And it makes me wonder, Andy, too, the rest of Silicon Valley, as we know, we did see the big tech CEOs, a lot of them, hauled before Congress once again. But I do wonder, if we're worried about privacy, then we, as you said, need to make it a regulatory thing and look at all big tech, right?
Right. I mean, and that's just one of the issues. The other thing is it's just a really terrible look for a democracy that purports to, uphold values of the free market, to be seen knocking out the biggest competitive threat to Silicon Valley that has ever come out of China. This isn't just a little app. This is like the smash hit app of the decade, maybe of this century. And in China, people are rightfully outraged. They're saying, they're pulling down a competitor, or forcing its sale, with a gun to its head at a knockdown price. I mean, even Bill Gates. I mean, of course, Microsoft is in talks to pick it up. And Bill Gates over the weekend was quoted as saying, "This is really weird,"
Yeah, exactly. And you do wonder what will be ultimately the consequences when, we've already seen China start to fight back about different things. And you do wonder what it means then ultimately for U.S. tech in a market like China. Andy, thank you so much. Always appreciate getting some time with you. Andy Brown, editorial director at Bloomberg New Economy, on the phone from New York City. I feel like, Alex, big tech is going to continue to be this story. And I do wonder about privacy issues. Does it get more broadly? Do we start to see more regulatory oversight?
Oh, 100%. Whoever's in the White House, for sure. And also, do you get two worlds of tech, like the exact same company, one in China, one in the U.S., and what does that do to, say, productivity or innovation and all of that as well? I feel like that's going to really permeate over the next couple decades.
Yeah, no doubt about it. A big story, the tech Cold War that we've been talking about. All right, you're listening to Bloomberg Business Week. Carol Massar, Alex Steele. Let's get back to World and Nat. Let's check in with Nancy Lyons. Hey, Nance.
Hey, Carol. President Trump is voicing his support for college football players who say they want to play this season. He tweeted they've been working too hard to have their season canceled. White House Press Secretary Kayleigh McEnany.
He is very much would like to see college football safely resume their sport. And as he mentioned in that tweet, a lot of these college athletes, work their whole lives to get, 4 years. Sometimes if they're redshirted, an extra year. If they're lucky, they work their whole lives for this moment, and he'd like to see them have a chance to live out their dream.
ESPN reported over the weekend the vast majority of Big Ten presidents would vote to postpone the season, maybe to the spring. The nation's Postmaster General has begun an overhaul of the nation's mail service, just as the nation prepares for a presidential election in which many of the votes will be cast by mail. Democratic Congressman Jerry Connolly of Virginia says he thinks this is an attempt by the president to prevent votes from being cast.
He is afraid of people voting by mail in large numbers because of the pandemic, and one way to suppress that vote, and they're experts in the vote suppression, is to slow down the delivery of mail and threaten the failure of your ballot to get there.
Postmaster General Louis DeJoy has displaced the two top executives overseeing day-to-day operations at the organization, reassigned or displaced more than 20 others in top management. A House panel is asking the Inspector General at the Department of Health and Human Services to look into the government's purchase of nearly $650 million worth of Philips ventilators. GovExec reports that lawmakers fear the government overpaid by as much as $500 million. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Alex Steele. So one story, man, it's a company, it's been around forever, but, and I feel like just when you think it's down and out, then it comes back. And then today, Kodak, the share is plunging, a federal agency announcing it was suspending a $765 million loan, to help the company produce COVID-19 drugs. They're investigating potential wrongdoings. It's like, wait, what?
How much do I love every single part of this story?
Can I first of all say how much I love you? Because I'm like, do you want to do this story? And it might be a little like, I don't know, boring. And you're like, no, love it.
No, I love it. It's so great. If you guys read Matt Levine's column at Bloomberg, he has been like ripping into this, and it is hysterical, and you have to check it out. I mean, there are just so many layers to it, like how the loan was disclosed, and then who traded what, and then options, and then you get all the Robinhood retail trader guys in there, right? Like they're just messing everything up by taking these stocks, even betting on bankrupt stocks and making big hay about them.
Yeah, exactly, right? If you think about this, right, it hurts, right, that they just jumped on. They didn't care, right? The stock was moving big time and taking, advantage of it. But it's interesting. So there's this investigation, and, I guess it felt like it was a bit of a lifeline to Kodak, right?
Yeah, it was definitely like, here, you can stay in business by making drug materials, which, by the way, that's weird. But apparently, so basically, the company did they break the law by they told some news outlets about the planned loan before informing investors, and then they had to walk it back and say, hey guys, just kidding, don't release the information, when they should have just released the information instead of trying to weirdly walk it back. And the SEC is trying to figure out if they indeed broke the law. It just feels like seriously bad management at that point.
Exactly. And I want to say this is like a Harvard Business School case study, but I feel like it's so much more than that, right? I don't know. But stay tuned, and the stock is definitely moving, certainly, as we mentioned, plunging in today's trade. All right, you're listening to Bloomberg Business Week. Carol Massar, Alex Steele, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell. The Dow pushing higher and S&P also advancing. It is a down day for the NASDAQ Composite Index. S&P 500 approaching its all-time high reached prior to the coronavirus pandemic, while the tech-heavy NASDAQ 100 has lost almost 2% at its low of the day. Here's where we stand right now. We've got the S&P 500 index up 8 points, a gain of 0.2%. The Dow's up 342 points, up 1.3%, while NASDAQ is down 44, a drop there of 0.4%. 10 years down 2/32, 0.57%. Gold is down 0.5%, 20.26 the ounce, and West Texas Intermediate crude up 1.9%, 42.01 a barrel. Recapping, stocks mixed, S&P up 8, a gain of 0.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you, Charlie Pellet. McDonald's stock going nowhere today, but the headlines came fast and furious in really an unbelievable story. And joining us now to talk more about that is Ann Rowley-Moffett, Bloomberg News U.S. consumer editor. She joins us on the phone. And this is like the gift that keeps on giving. I mean, can you just break down what we learned today about the former CEO, Mr. Easterbrook, and multiple affairs and what it means for McDonald's?
Sure, and this certainly feels like a story of 2020, if anything ever was. So Steve Easterbrook had been McDonald's CEO, and he was fired last November. That was public at the time. We reported it. He came out and admitted to having a consensual affair with an employee, and so it's the Me Too era. He was ousted. The company said it stands by its values.
Because let me just interject for a second. Was it not okay in the company for him to do that? Like, was he not allowed to have any sort of relationships with anyone in the company? Just to be totally clear.
Yeah, well, they never revealed who it was, but considering he's the CEO, that means he is at the top. So everyone is technically under him. And at the time, the company was really cracking down on misconduct within its franchise level. You know, people who are flipping burgers. The whole Me Too era. So I think they decided a zero tolerance policy. So at the time, they let him walk away with, we calculated, about $73 million in severance. It was a consensual relationship. They were all adults. Fast forward to now, the company received an anonymous tip in July from an employee, which resulted in them reopening the investigation. And it turned out Easterbrook had affairs with at least 3 other employees while he was CEO. Yeah, and not only that, it looks like he lied about it. The company is saying that he tried to delete evidence, delete some naked photos off of his computer. And so the company now wants to change it to firing him, with cause instead of without cause, so that they can get that severance back. So that's the lawsuit they filed today, which is a crazy story.
So how likely, Anne, is that? And I know, I'm just curious what you're hearing from lawyers, from the legal world, about how likely it is that they can do this.
Yeah, well, companies and former executives, they often settle these clawback matters privately because they want to keep it out of the press. In this case, I think McDonald's decided the board really wanted to distance itself from this inappropriate behavior, so they brought it out in the open. That happens every now and then. Rental car company Hertz, for example, it sued its former CEO to recoup compensation after that federal investigation prompted the company to restate several years of financial results. So every now and then this does happen publicly, but I think McDonald's is really taking a stand and trying to distance themselves by putting this out there for everyone to see today.
So let's just backtrack a second here, okay? Because you kind of glossed over all the good stuff. So it wasn't that he had multiple. It wasn't just that he had multiple affairs. It wasn't just that they found some stuff in his files. It was that there were naked, suggestive pictures and videos that he sent from his account at McDonald's to his personal email account that they didn't find because he deleted them. But then once they went back and looked at the server, they were able to find them. I mean, first of all, can that guy be really? Well, don't do that. If you have your naked pictures, just use a different phone.
Exactly. CEO 101. Don't send naked photos of your employees from your, from your public account to your private account. But that's absolutely right. And the company did do an investigation last fall when this first relationship came out. But it said it didn't find the photographs because Easterbrook had deleted them off of his work-issued phone. But I think what he didn't realize, at least what the company says he didn't realize, was that didn't take them off of the server where things are stored long-term. Now, we should mention that Easterbrook has not replied yet to this complaint. We reached out to his attorneys and haven't heard anything back yet. So as of now, it's the
the company's allegations, but they are certainly quite juicy for Bloomberg News, I would say.
Yeah, it's amazing though that he was able to do it. Right, it stayed quiet, and then all of a sudden somebody has come out with this information, and I guess we'll find out more details as to potentially who this person was.
Yeah,
Right,
good job with that investigation, you
who these
guys.
people were.
Yeah, exactly.
I think some of it also has to do with the Me Too movement. This is a big thing we were hearing about last year. It's certainly still continuing, even though the COVID story has certainly taken over the press. But there still is way less forgiveness for badly behaving CEOs. And so yes, it took until July for this anonymous tip to come out. But I just think workers aren't willing to put up with this kind of behavior anymore, and so somebody decided to step up.
Does McDonald's get any money from this? I mean, in that they don't have to pay extra stuff. Could this actually be financially material for them at the end of the day if they win?
I think it's really getting back these stock awards, which is $37 million. That's certainly not chump change, and any damages. But it's not about the money. I think it's much more about reputation. It's just interesting because stocks didn't move much on this today, but back in November when Easterbrook was ousted, shares did fall. He was very popular with Wall Street. He had done a lot of good things for the company, moved it into a technological digital age. He'd acquired stakes in several AI companies that did cool things like when you drove through the drive-thru, it can read your license plate and know that you usually order a Whopper, so maybe it will just start getting a Whopper ready. He'd been seen as very forward-thinking for a fast food CEO. So I think this really surprised people when he stepped down in November. It probably surprises people even more right now.
Despite all of this news, trading at 204.62 a share. Anne, thank you so much. Anne Riley Moffat, Bloomberg News Report. She covers the U.S. consumer space. But, Alex, you're right. It's don't use your work phone.
Yeah, I don't understand how hard that is. Don't people have 75 different phones anyway? Is it really that hard to just take the bathroom selfie with your other phone? I don't
do what you want, but just don't use the office phone. You do wonder. And, this gets back to I feel like these arguments that people make that a lot of leaders, executives feel like they're invincible, right? And they can kind of just do whatever because often they get away. But you're right. Note to self. Yeah. Use the private phone.
Yeah.
Don't use the family phone either.
Don't use the family phone. Just get a new phone. Get a burner. Get a burner that has a camera and a video. Let's just be real.
Oh, my God. All right. Watching McDonald's, watching the market. Stick around. We've got the chart of the day. Of course, it'll come along with the song and Dave Wilson. So
I'm nervous with the song, by the way. I'm nervous.
Just Google fast search. It works all the time. This is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So, Alex Steele, I forgot. Did you say you were good at guessing these songs?
Oh my God! Okay, look, I'm here all week, Dave Wilson. If you could throw in a musical theater song, I could prove my acumen. But otherwise, I'm literally dragging you down.
We will talk to him about that. He's going to throw in one of those. All right. We're going to get to Dave in just a minute and his chart of the day. Let's get back to Charlie Pellet for a check on your top business stories and 29 minutes to go in the trading day, Charlie.
Indeed, and we have got the Dow Jones Industrial Average very close to the best level of the day right now. We've got the S&P pushing higher. NASDAQ on the minus side. Should point out the Dow is being led higher by shares of Boeing, Caterpillar, and Raytheon. So let me give you the numbers first. We'll give you the why in just a moment. Right now, the Dow is up 358, up 1.3%. The S&P's up by 8 points now. That is a gain of 0.2%. But NASDAQ 100 index both lower. NASDAQ is down 52 points. That is a drop now of just about 0.5%. So the Dow, the S&P, NASDAQ, they are trading mixed. Oil rising the most in almost 3 weeks. Investors selling some of the high flyers that have driven the latest rally that almost pushed equities back to records. So right now we have got, as I mentioned, stocks mixed. The 10 years down 3/32, the yield 0.57%. Gold down 0.4%, 20.26 the ounce, and West Texas Intermediate crude up 1.75% right now, higher by 72 cents a barrel, 41.94 on WTI. Again, some of the other stories that we are following for you today. Eastman Kodak shares are plunging after a federal agency announced it was suspending a $765 million loan to help the former film company produce COVID-19 drugs pending the outcome of investigations into potential wrongdoing. Shares of Kodak now uses the ticker KODK, no longer uses the EK ticker. Shares of Kodak are down now by 30%. 3:33 on Wall Street. Time now for the Small Business Report. And here's John Tucker.
Time for the Bloomberg Small Business Report. At least one group of small businesses appears to be doing well during the pandemic, those that cater to outdoor activities. Rob Martinetti is a co-owner of a bicycle shop, Shrewsbury Bicycles in Shrewsbury, New Jersey, and he is joining us right now. Rob, were you forced to close for very long?
So we were forced to close for, I think it was just one day, and then the very next day they declared bike shops along with auto repair places as essential, but it was very limited ability. Like, we basically couldn't have anybody in the store, so we had lines outside, helping one person at a time, which was a bit challenging because literally the phones are ringing off the hook. We had lines down the street.
It sounds like business actually picked up to some degree.
Oh, no, it went right through the roof. I mean, it was like instantly business doubled to whatever it normally would have been.
Is there a downside to that?
Well, the first challenge we had is we immediately saw the need to load up on bikes because we knew that China was shut down for a few months and there was going to be a big demand and the supply was going to be a little short. So we got about 2 months worth of supply, more than we normally have coming into our season, which is a lot. I mean, a lot. So we couldn't handle it in store. I mean, we were storing bikes in the showroom because we couldn't have people in the showroom, like bike boxes. I had to get storage containers out in my parking lot. I had to get 5-pod containers, and that wasn't even enough. We had to rent a warehouse, and we basically filled that up with bikes. So we thought we were pretty far ahead of the curve, which we were to some extent, but that actually didn't last us nearly as long as we thought.
Rob, thanks a lot. Rob Martinetti, co-owner of Shrewsbury Bicycles, and we're going to continue to bring you stories of small businesses trying to survive and thrive during the pandemic every day at this time right here on Bloomberg Radio. And that is your Bloomberg Small Business Report.
And we thank you, John Tucker, again, recapping here equities mixed with the S&P up 8, up 0.3%. I'm Charlie Pellet. That's your Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. This is Bloomberg Radio. All right, Alex Steele, don't fail me now. Otherwise, I will be totally disappointed in you. You know? Are you serious?
I mean, I know the song. I can jam to it.
Do you know the artist?
Probably, keep singing it.
Do you know the artist?
But no. When I said I don't know pop culture, a girl was speaking the truth.
Oh, my God. Okay, all right. It's
They're gonna kick me
Prince.
out. I'm not gonna be welcome
It's
back.
Prince. Have you seen Purple Rain?
Prince. Yes, of course. Okay, now you say Prince. I'm like, oh, well, yeah, of course it's Prince.
Dave Wilson, come save Alex Steele, please.
Is that possible?
No.
It is possible. It is possible. You know what, Dave? I'm going to email you a list of the songs I know, and you can choose one of them and we can surprise Carol. How about that?
One goes like this: Oklahoma, where the wind. Like, is it that kind of stuff?
It is exactly that kind of stuff. And like early Madonna. And maybe some Tori Amos from
early
like the late
Madonna
90s.
makes me love you again.
Oh, good Lord. Anyway,
All right.
Why 1999? Because what Apple decided to do the other day sort of reminds you of what S&P 500 companies were doing back in 1999, and they really don't do it the same way anymore. And that something is deciding to split their shares. They're planning a 4-for-1 stock split. It'll take effect toward the end of this month. And going through the data on the Bloomberg terminal, I found out Apple's only the third company in the S&P 500 this year to split its shares. You had a trucking company, Old Dominion Freight Line, do it in March, followed by a medical device maker, Edwards Life Sciences, in May. And so what I did is went through every company in the index and every stock in the index, because let's not forget some companies have two classes of shares, to figure out what was the date of the most recent stock split. And then the chart lists them by year, so you get a total for each year. It turns out that 2000, just after 1999, as the internet-driven bull market of the 90s was peaking, well, that was the peak for stock splits. 42 companies or thereabouts. Actually, that's part of a bigger group, going back from 2000. More than 30% of stocks in the index have gone without a split since 2000 or longer. So 20 years minimum. And in fact, another 24% have never had any. Think about Berkshire Hathaway as an example there, I suppose. Google, the owner of Google's owner, Alphabet, certainly another one. And what the chart does is it shows the number of splits against the index. So you can see, the S&P 500 has been pretty much going up for more than a decade, and yet the stock split just isn't there anymore. Because, you can buy fractional shares through brokers because it's much more of an institutional market, so they don't care if the price is 1,000 or 2,000 or whatever. Apple's a little different in that regard. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I'm still kind of reeling from the
I
Prince
know.
thing.
She's just looking at me. She keeps laughing.
Because you're brilliant. So it's like, I'm like, wait, just know Prince?
No, I do know Prince, but I may not know the specific song. I can
That's right. You did know it once I said that. Okay, we'll have to get to Broadway.
She's giving me an out, and it's just not right.
I am. Dave Wilson, Broadway. Let's bring it in. All right, Dave Wilson's going to be back a little bit later on. Let's get back to world and national news. Let's check in once again with Nancy Lyons. Hey, Nance.
Hey, Carol. President Trump is once again urging a judge to block a New York grand jury from reviewing his tax filings. We get more on that from Bloomberg's Nathan Hager.
This latest filing from the president's lawyers comes after the Supreme Court ruled the president does not have absolute immunity from state criminal investigations. Manhattan District Attorney Cyrus Vance Jr. issued a subpoena for the president's records as part of his investigation into hush money payments to a porn star before the election. But last week, Vance also suggested there may be grounds to look into potential fraud by the president's business beyond those payments. In today's filing, the president's team argues the subpoena was issued in bad faith and seeks too much information, constituting improper harassment of the president. Nathan Hager, Bloomberg Radio.
Chicago's police commissioner says more than 100 people were arrested following a night of looting and unrest that left 13 officers injured and caused damage throughout the city, including in the upscale Magnificent Mile shopping district. Police Superintendent David Brown says it was not an organized protest, but instead an incident of pure criminality.
Let's have the criminal justice system here deliver a strong message to these criminals that there will be consequences for your behavior.
The city has activated a neighborhood protection program that will be in place in the foreseeable future. In Portland, officials there say protesters launched commercial-grade fireworks at police in another night of Oregon rioting and even used a mortar in their attacks. Portland police say 2 officers were injured, 16 people arrested. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thanks so much for that update. Carol Massar here with Alex Steele. I have to say, I love when there's a company that, kind of just comes out of the blue and all of a sudden we're just talking about it constantly. And it's one company that's really impacting certainly the retail trade. And we're talking, Alex, about Robinhood Markets. And we got an important metric from them, it looks like, today.
Yeah, so the company, they said that their daily average revenue trades, known as DARTs, was 4.31 million in June, 4 times that from E-Trade Financial, and higher than all of the other publicly traded rivals. Now, they don't actually charge fees, so the DARTs are like kind of nebulous, but it does show just the amount of frequency trading. And the majority of that is actually options. A huge amount of option trades go through. And, Dave Wilson brought up the fractional trading, and you have to wonder if that goes then on Robinhood, like how much business they're going to see from that.
Right, and I also do wonder, too, and this is something I feel like regulators are starting to kind of, nosy around a little bit, but do folks that are on these platforms really understand some of the risks that they are taking? Like we talked about Hertz and we talked about Kodak today, right? And they're playing, and, traders in general, right? Investors in general love it when stocks are moving, but, it's great when you're on the right side of the trade, but when you're not, you can be hurt pretty dramatically.
Yeah, but, it was really easy to try and discount them in the last 5 months, but they called it.
Yeah.
Like they started buying the bottom in the stocks, like the MGMs or the casino players, the travel stocks, and they were right. And they bought it before it turned. They were outperforming some of the hedge fund trades. So it's like, we can say that, and you're absolutely correct, but then they still beat.
Yeah.
And I guess the question is, like, are they out of the market, or are they still in it and then therefore exposes them to more downside?
Well, and was it last week, whether it was, I think, some hedge fund investors or private equity, like they were starting to look at what Robinhood was doing and looking at their trades and kind of getting more familiar with the platform because they saw how Robinhood was really ahead of the pack. So it's interesting when the big institutional guys, right, are checking them out, Alex.
Yeah, and RobinTrack was tracking them, but now they can no longer do that, so they have to come up with different, I think, creative ways to figure all that out now.
Yeah, it's certainly been, I feel like when we get to the end of 2020, when we do finally get there, this is going to be one of the big stories of the year. Please, God, happen now. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. On Mix Monday, we do have stocks holding close to session highs. 13 minutes to go until that bell the closing bell clangs at the New York Stock Exchange. Stocks mixed. Investors selling some of the high flyers that drove the latest rally that almost pushed equities back to records. Crude oil is gaining, and right now we have got the S&P 500 index advancing by 6 points, up 0.2%. The Dow advancing 348 points, again close to session highs, up 1.3%, while NASDAQ is slumping 60 points lower now by just about 0.6%. 10 years down 4/32. The yield on the 10-year 0.57%. Gold is down 0.6% now, 0.6% at 2024, down $11 the ounce. And crude, West Texas Intermediate, up 1.8%, 41.98 a barrel. Recapping equities mix with the S&P up 5, up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, time for the Drive to the Close. And with us is Caterina Simonetti. She's Senior VP at UBS Private Wealth Management, and she joins us on the phone from Philadelphia. Caterina, good to have you here with Alex and myself. The last time I think we talked with you, or at least I remember back in February, you talked with us about the virus concerns on the economy and the equity markets. You thought that they would be short-lived. Here we are in August, and we're still kind of grappling with them, although Wall Street seems to be in a pretty good place. How do you kind of reconcile what's going on in the economy versus what's going on in the financial markets?
Well, Kira and Alex, thank you for having me on the show, and I can't agree with you more. There is nothing normal about this year, and it certainly is absolutely unpredictable. And the one thing we have to remind ourselves about is that we are in this situation. What's happening in the market right now is not primarily economically driven. It is this external factor, is the virus that we always have to keep track on. And what is interesting is, despite of the fact that we had this very substantial first wave, and now we're dealing with the second wave, what we see is this very gradual and methodic reopening of the economy. And what certainly is helping is the fact that our economy, and actually globally, the markets are flushed with cash through this unprecedented support by the Federal Reserve and central banks, around the world. So with the strong monetary policy, coupled with the essentially, important fiscal stimulus that, we're hoping for, the second part of it that is going to be, coming through soon here, that's why markets feel so supported, and also certain sectors of the markets, of course, are benefiting tremendously from the stay-at-home narrative. And that's what we're seeing. That's why we're seeing this rally, that is happening right now as not a bubble, but something that is quite sustainable, actually.
So how low can real yields go? And I single out real yields because I feel like that is truly what's driving asset allocation right now.
I agree they can go quite low. And, when we look at the yields right now, the question is, investors need yield, they need income, and where do we truly find it? And more and more, in addition to the areas of fixed income, which, by the way, we still believe that there are certain attractive valuations in fixed income in areas like tips, like corporate credit, like, high yield. But more and more investors are really evaluating the risk profiles and looking at the dividend-paying stocks, at equities, as the higher yielding alternatives, because it is just so unbelievably hard to find yield. And we are, basically the Fed rate is at 0 right now. Can it go negative? We hope not. But is it a possibility? Absolutely, it's a possibility. We've seen it in Europe.
What's the scenario planning, though, that you're doing because of that? I mean, what are the assumptions that, I mean, you guys have to make some decisions in terms of investment strategy. What are the assumptions you're making when it comes to the yield environment?
We're looking at every aspect of the asset allocation, and specifically at the involvement of the risk assets. And the question is, of course, here is are we properly utilizing every piece of the allocation? And just as usual, asset allocation will involve a pretty significant cash balance. And these days, cash is not earning anything at all practically. So we have to evaluate that. We have to come back and say we only should keep as much in cash as we absolutely need to for the 6 months to possibly 12 months of living expenses for your individual clients. And then, specifically within fixed income, we have to be extremely strategic. Again, evaluating the sectors. Maybe the asset allocation there, should definitely involve investment credit and tips. And as I mentioned, high yield. It's not as simple as just the treasuries or just more basic portfolio. It involves the strategic planning and diversification within fixed income, both by credit, both by quality of the holdings within the portfolio, but also the duration. And the finding yield is not just a problem now. This is something that we will have to be facing for years to come. So strategic planning right now will have to be not just for the short term. It has to be long-term based.
So where does gold fit into that then?
So gold is a fantastic hedge against volatile markets. And we have to remind ourselves that we're not really out of the woods. What's affecting this market right now is the fact that there's no vaccine yet, even though we're really positive and enthusiastic about developments in that space, but there is no vaccine. And then we have less than 100 days left until the election, and there's a lot of volatility that comes with that. So gold there, it just offers this wonderful, hedge for the portfolios. And usually the negative side of gold, why would we advocate against gold? Is because it's a non-yielding asset class. But to your point, in the environment where real yields are so low, that's where gold fits in great. And we also, in the future, we actually, are anticipating that eventual depreciation in the value of U.S. dollar, and gold will benefit in that scenario. So we think that the longer-term positioning of gold is actually quite strong, not just as a hedge against volatile markets, which we expect heightened level of volatility with upcoming election, but also longer-term benefiting from some of the economic trends.
Hey, Katerina, just got about 40 seconds right now. Where don't you want to be in this market environment?
We are cautioning investors against sectors like consumer staples, real estate, and utilities. We think that longer term, there's going to be time for them, but not right now. Right now, this is probably our least favorite sectors of the market.
All right, we're going to leave it on that note. Katerina Simonetti, she's Senior Vice President at UBS Private Wealth Management, joining us on the phone from Philadelphia. And I just want to bring a headline crossing the Bloomberg. The state of California winning a preliminary injunction against Uber and Lyft. And this was an injunction that was seeking to force Uber and Lyft to immediately reclassify their drivers as employees. I mean, this is a big issue, Alex, when it comes to the gig economy, right? And how do you see these workers, the classification of these workers?
Yeah, and I wonder what that means then for like paid leave, paid time off, right? Like overtime, like what the financial burden is going to be like that for the companies, and if the power is sort of shifting then to the labor market, and what the longer term implication of that is.
Right, it's a good question. Uber right now is down about 2.4%. Looks like it bounced down a little bit on that news, so we'll be watching them into the close. Quick check on Lyft too as we get to wrap up. Lyft right now is down about 4.8%, so certainly some names we're watching. All right, folks, just about 3.5 minutes left in today's trading day. Alex and I will count you down to that closing bell. Take a look at some of the stocks on the move right here on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Monday, August 10th. The Dow closing at the best level of the day. S&P 500 index close to it. It was a down day for the NASDAQ Composite Index. Let's get right to the numbers. I'll give you the why in just a moment. The S&P 500 index advanced 9 points to 3360, up 0.3%. The Dow up 359 points, up 1.3%. NASDAQ down 42, a drop there of 0.4%. Should point out that the Dow has narrowed its year-to-date loss to just 2.61%. 10-year down 4/30 seconds with a yield of 0.57%. Gold is down 0.5%. 2024 the ounce, and West Texas Intermediate crude up 2%, 42.03 for a barrel of WTI. Well, as for what's driving the U.S. equity market, Caterina Simonetti is Senior VP at UBS Private Wealth Management. She was our guest moments ago right here on Bloomberg Business Week.
So with the strong monetary policy, coupled with the essentially, important fiscal stimulus that, we're hoping for, the second part of it that is going to be, coming through soon here, that's why markets feel so supported, and also certain sectors of the market, of course, are benefiting tremendously from the stay-at-home narrative.
And repeating our earlier headline, big announcement out of California. Uber and Lyft have been ordered to convert their California drivers from independent contractors to employees with benefits, an early loss in a court battle the gig economy cannot afford to lose. Uber shares down now by 1.9%. Lyft shares, they did advance today by about 2.9%. Eastman Kodak shares plunged after a federal agency announced it was suspending a $765 million loan to help the former film company produce COVID-19 drugs, pending the outcome of investigations into potential wrongdoing. Shares of Kodak down today by 27.8%. S&P up 0.3. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Move around. Motion creates the motion.
I feel the earth move under my feet. You move like they do. I've never seen anyone move that fast.
Shake. All right, people, let's move like we've got a purpose.
Something's called movers and shakers. They cost a little more, but that name cracked me up.
Bloomberg Business Week. Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, one trading day down for the week. Carol Masser along with Alex Steele. Jason Kelly, my co-host, is off this week. Let's start with kind of the big picture, Alex, here. Just checking out the S&P 500. Definitely kind of an interesting day here, but the S&P 500, a little bit of more of a bullish tone. 343 names in the index, higher today, 161 lower, 1 unchanged. But it was kind of an interesting day. I feel like we had a lot of corporate news.
Or at least some good news for some of the travel stocks. We'll just put it like that way.
Let's do that.
Yeah. In particular, you take a look at, say, MGM, for example. I mean, you had Barry Diller's IAC Interactive investing $1 billion in MGM Resorts. So, okay, that's something. MGM definitely needing that. So it's overall sort of a 12% stake that IAC now has in that stock. That just comes weeks after it spun off that online dating service Match Group. Match Group? It's just Match.com, right? I mean, it's Match Group, but it's Match.com.
Yeah.
So anyway, so, there you go. There's MGM Resorts getting a little bit of love there.
Yeah, absolutely. And I do wonder if, there's got to be some individuals who are looking, and some investors who are looking at some of the beaten down names, especially in the travel and hospitality world, and just saying, all right, the upside or potential is there, right? And so it's something to definitely take a look at. Royal Caribbean, we heard Charlie talk about it earlier. That too was among your biggest gainers in the S&P 500, up 10% in today's session. Company did come out with their quarterly update for the second quarter, net loss of $1.6 billion. They did talk about they've got about $4.1 billion in cash as of the end of June. Talking about capital expenditures, they are seeing a net loss for the third quarter in 2020 fiscal year. Says they booked their position for 2021 is trending rather well. And I do think, having talked with some of the folks in the cruise industry, they are looking out to 2021. They are beginning to see bookings. So people, you and I talked about this at the beginning about, would you get on a cruise ship right now? there are folks that really love it, and they are signing up.
I mean, I'd be scared of cruises like all the time, so not my jam. But you're right. Yeah, signing up. Also, United Airlines also up, and I feel like this also helped buoy the optimism. Is that airline passenger traffic in the U.S. Was over 800,000 on August 9th. So that was yesterday. So that's a definite positive. Clearly, way below a year ago, but over 800,000 is definitely good considering the average of the last 7 days was just under 700,000. So that definitely a positive for that industry as well.
And when's the last time you were on a plane?
Oh my God. February 25th.
So just before.
Literally, it was like things were going down. It was London Oil Week. I was like, okay, I'm going. And nothing was canceled. And then everything started to get canceled while I was there. And then literally it was, like a week later that things just got really bad. So I lucked out on that. But those days are long gone.
I know, right? Jason and I have talked about that too. About how many times we would have been on a plane between now and March and just completely shut down. Although he did get on a plane, so I'm looking forward to hearing what his family experience was.
Interesting.
But I find that there's a lot more tourists. The business travel we're hearing isn't going to go back for a long time, but you are hearing, folks who want to go take a trip and just, get a break, get a vacation. You mentioned MGM. We talked about Royal Caribbean Wynn also, I think on that MGM news, also getting a bit of a lift, up about 10% in today's session. I don't know if you saw the number one decliner, Tyler Technologies, not a company that I talk a lot about, but it's your number one decliner in the S&P 500, down almost 6% in today's trade. And I was kind of poking around, couldn't really find a good reason. And it's up about 12% so far this year, but nonetheless, some concerns. It's an application software company. So there you have it. Quick check on the VIX, the volatility index report on this Monday. And the VIX just dipping down a hair, down about 0.7%. The VIX closing at 22.06. This is Bloomberg.
All right, Dave, you're up. Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson! No, he's got the best lead-in song.
It's the best. I love it. It wins.
Dave Wilson, what do you got for your stock of the day?
I've got Avaya Holdings, Carol. It's a business communication company with quite a history. At one point, it was part of AT&T. Then it was spun off along with Lucent Technologies, the phone equipment maker. Then it became independent through another spin-off back in 2000. Avaya went through Chapter 11 bankruptcy in 2017 and has traded publicly since then. The ticker is AVYA. The shares dropped in each of the past 2 years, and this year they were down as much as 55%. They set a record low in March. Avaya has rebounded since then and is now higher for the year. The rally accelerated after the release of fiscal third quarter results today. Avaya's revenue was little changed from a year ago rather than falling, as analysts expected in a Bloomberg survey. An earnings gauge known as EBITDA beat the highest projection. What's more, the company reinstated fiscal year forecasts after withdrawing them in May because of the coronavirus, and the sales and profit predictions beat estimates too. Avaya's shares reached a 15-month high after the figures came out. At one point, they were up more than 20.5% today. They closed with a gain of about 11%.
Pretty interesting. So what are they doing for the year, Dave?
Well, let's take a quick look here. My trusty Bloomberg terminal, and Avaya's shares are up 12%. So basically today is pretty much the gain for the year.
So thank you very much, Monday gain.
Yeah.
All right. Dave Wilson, thank you so much. Alex Steele, I don't know what you have to do to get like a lead-in song like Dave has.
No, I mean, come on. My last name's Steele. Like Steely Dan,
you could do some cool things.
I think you could kind of rock the Steele thing, not the Alex thing, but the Steele thing. I think it could definitely happen. We just have to give it some time.
We'll ask Paul Brennan when he comes back tomorrow if we can work on something. All right, Dave Wilson, thank you so much. Dave Wilson, of course, with his stock of the day, and go online too to check on his chart of the day. All right, coming up, we're going to talk a little bit about, Alex, some of the news coming out of Washington because, man, Congress didn't get a deal done, and so the president kicked into an action over the weekend.
Yeah, I find this really fascinating, and states really pushing back. There's the legality issue. When I don't understand why we just can't agree, stimulus is stimulus.
Yeah, right, exactly. Why can't we just get along, right? Like, I'm just saying.
There's a song for that, right?
There is. All right, let's get back to world and national news headlines. Covering it all for us is Ed Baxter in our San Francisco studio. Hello there, Ed.
Hi, Carol. How are you?
Good.
California Governor Gavin Newsom, not all that well today. He's just responded to how the lack of relief bill and subsequent presidential executive order you were talking about will affect citizens and the government. He says it will create massive delays in getting money out, as well as a tremendous burden on states and localities.
That cost would inure to the state of California, its taxpayers, roughly $700 million per week. If that fund, and it's a fund that has limited resources, $70 billion currently, if that fund drops to $25 billion or less, then those federal dollars disappear. If the state of California was to absorb those costs, you're looking at $2.8 billion every week.
$2.8 billion a week. California's public health director, meanwhile, Dr. Sonia Angel, had resigned abruptly over the weekend. That's just days after the discovery of a computer system failure that resulted in undercounting of COVID-19 cases. The governor says it is working now nonstop and updating the data systems. As for the numbers himself of cases, he says of those counted, he says the trends seem favorable. New York City Mayor Bill de Blasio says schools will reopen in September with 700,000 students participating in what he calls blended learning.
74% of our students planning to participate in in-person learning, blended learning, starting next month.
Yeah, and he says things will be safe. Governor Andrew Cuomo has some tough words today for utilities that obviously were not prepared for the power of Storm Isaiah. He says he can rip them down. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed Baxter, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Alex Dale. I have to say, this is where, again, I feel like the disconnect, Alex, between Wall Street and Main Street, because we continue to see, certainly as the market goes up, and particularly for those CEOs of some of those big tech names, they're just getting wealthier and wealthier.
Yeah, the latest is Tim Cook hits billionaire status with Apple stock nearing a $2 trillion valuation. A really incredible number, which was what was so interesting when you had all the big tech names reporting, right? It was sort of like, so no one had jobs and everyone needed money from the government, but they then all went and bought iPhones and went on and they sent emails on Facebook through Instagram. Like it was just really weird. Like this is where that something doesn't make sense here.
Well, yeah, no, I agree. I mean, and it's kind of interesting to see. And I'm certainly someone who's in favor of capitalism and companies figuring out how to do things. But you know, it does often then remind us of the wealth gaps that we're seeing increasingly, certainly over the last few months because of the virus and because of so much more. But right, I mean, this story by Anders Mellon, he covers the CEO space and particularly one of our wealth reporters, but talking about Apple specifically when Steve Jobs died, you know, that company was valued at about $350 billion. And meantime, now this company is worth so much more. And as you said, now Tim Cook has his own personal wealth is more than $1 billion. It's pretty remarkable.
What's also interesting, though, is that it's very different than the likes of like Zuckerberg and Bezos and Elon Musk, for example, because they own such a big part of their company.
Right.
And they have such big voting rights. Tim Cook doesn't really have that. So it's a very sort of separate story where Apple is a behemoth unto itself versus sort of the key man risk that an Elon Musk might have with Tesla. Tim Cook doesn't have that with Apple. Like we moved past that after Steve Jobs.
No, that's a really good point, right? It's just Apple as a company, right? And just what it has done in the last decade or last 5 years. It's pretty remarkable. All right, check out that story at Bloomberg.com and more. You are listening to Bloomberg Business Week, and this is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelota. Mixed Monday as investors sold some of the high flyers that drove the latest rally that almost pushed equities back to records. We did see the Dow Jones Industrial Average closing close to session highs, up 357 points, a gain of 1.3%. The S&P was up 9, higher by about 0.3%. By the way, that brings the S&P's year-to-date gain to 4%. NASDAQ fell down 42 points. It was lower by 0.4% today. The 10-year, the yield 0.57%. Gold down 0.4%, 20.26 the ounce. And crude, West Texas Intermediate up 2% today, 42.06 a barrel. Recapping equities mixed. NASDAQ lower, the Dow, the S&P both higher. S&P up 9, up by 0.3%. I'm Charlie Pellet. That's your Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. So a lot going on in D.C., and I know earlier on CNBC we heard from U.S. Treasury Secretary Steven Mnuchin talking about a possible relief deal, but feeling like it's not so easy, as we know. Bloomberg News White House correspondent Josh Wingrove has been all over it. He joins Alex and me on the phone on this Monday. So where shall we begin, Josh? Because we didn't get what we expect, I guess, or what we hoped for in terms of some kind of relief last week or another round of relief for U.S. citizens and businesses. But we did have the president go into high gear over the weekend with executive orders.
Yeah, with a bit of mixed effect. You know, there's some dispute over what the president's powers are, and the executive orders that he signed, or not all of them are executive orders, but, you know, call them orders for lack of a better phrase, they're not particularly wide-ranging in some cases, and in other cases are problematic. And we've discussed this, I'm sure, already in terms of the UI, putting some of the onus on states to help fund that. You know, that's going to be an issue. The payroll taxes deferral is just that, a deferral, not a suspension. Who knows how companies are going to react to that. But in Congress, I think there's still hope among some that, you know, a more fleshed out deal will go there. It's Congress that has the real authority here to, you know, do things like slap on an extended UI top up or something more wide-ranging on evictions, that kind of thing. But, I mean, the Senate Majority Leader Mitch McConnell tweeted just moments ago that he'd hoped they would be finalizing this week. That he's blaming Democrats for not delivering. He's crediting the president with softening the blow. Not exactly sending signals that they think they're heading back to the table soon.
Yeah, that was interesting because that wasn't the rhetoric of the weekend. The conversation was, this is going to bring the Republicans and Democrats back to the negotiating table. This was what President Trump was trying to accomplish. Why haven't talks restarted? And is Nancy Pelosi, the House Speaker, going to overplay her hand here?
Well, Republicans certainly think so. I mean, I think the jury is a little bit out for what that's worth. I mean, Pelosi drew her line in the sand. She said, come back when you're willing to offer more money. Republicans said that her compromise, though, was false. I mean, she cut money off her proposal, not by cutting the size of the programs, but by cutting how long they would run for. In other words, Republicans thought she'd be back knocking on the door for the same amount of money, you know, sooner rather than later anyway. But they remain deeply at odds. So if you are facing eviction, if you were relying on that unemployment top-up, you know, I hesitate to be the bearer of bad news, but there's not, it doesn't look like there's going to be a deal, you know, in the next couple of days, certainly, but even potentially for a while. Some of those big sticking points in particular remain, again, that UI thing, which Democrats generally favor extending, but Republicans don't want to offer a disincentive for people to return to work. And state and local aid, states and you know, governors' houses across the country find themselves pretty cash-strapped. Democrats want money for those. The Republicans see it as a bailout, in particular of larger, which tend, of course, to be bluer states.
I have to say, Josh, you know, some of the conversations I've been having with my husband over the weekend, we've been talking about these executive orders. I mean, you know, Congress is the one who is the body that allocates money, right? I mean, so what ultimately can the president do? Can he do things, even with these court challenges, you know, from Democrats and Republicans possibly? You know, can he still do things, you know, prior to or leading up to the election that doesn't get resolved until after the election?
It's messy. It's messy.
Okay.
I mean, it has to be. Essentially, with executive orders, what he can tend to do is pull back enforcement, generally speaking, of stuff already on the books rather than enacting new stuff. In other words, but he doesn't really have the power to suspend it or eliminate it, indefinitely. So, if you're an employer, you have a bunch of workers who qualify for this. Do you keep, saving that portion? You might have to pay it again to the tax man down the road. Do you give it back to the workers? Do you not give it back to the workers? It's complicated. It's really complicated. So, there's a school of conservative thought that thinks the president has more power than generally it's been understood to have. This is sort of before COVID was an emerging school, and a recent ruling on DACA sort of added fuel to that fire. Trump really didn't push the envelope all that much, or at least not as much as some were hoping he would with those orders over the weekend.
So quickly, as a market participant, what are the questions that I should be asking when I come in every day and I see nothing done from DC?
I mean, I guess your question is timeline, right? I think we'll continue to watch these closely. The president now has, given himself a reason, and he's having a press conference here in an hour or so to say, look, I'm the one who acted. Congress wouldn't act. But at the end of the day, what people are going to want is money in their paychecks and not their furniture on the front lawn after an eviction. And so, eventually Congress is going to have to act here. There's a lot of incentive. Who knows what will happen? But there's a lot of incentive for them to do something. Remember, all these folks are headed for re-election. The Senate majority is not a sure thing for the Republicans. They've got to keep their eye on the ball here. You mentioned, did Pelosi overplay her hand? We'll see. But I think you just got to keep watching the timing. We'll see where those numbers come in.
Hey, listen, just got about 40 seconds. Joe Biden, running mate. Any ideas? What are you hearing?
Oh, I know. I keep getting asked about this, and I keep tripping over myself and trying to come up with
Sorry.
I mean, I don't think that Biden should be in that much of a rush. Truly, I think that there are legitimate questions. Why? I mean, what? I mean, I think we overstate the value. How many? Certainly, he has a chance to send a symbol. In particular, if he picks a woman of color, for instance, as his running mate, that might really, juice the Democratic base a bit and, offer some motivation to get voters to the polls. But most pollsters will tell you that people vote the top of the ticket, not the bottom. So I don't know that he has to be in a rush. Joe Biden's strategy right now is get out of Trump's way and let Trump beat Trump.
Yeah,
and so I think
there is some benefit to being quiet.
Easy.
There is some benefit to being really quiet in this process and just kind of letting it go. Anyway, interesting election year, to say the least. Josh Wingrove, we love talking with you. Thank you so much. Bloomberg News White House correspondent Josh Wingrove joining us on the phone. And for those of you listening in New York and San Francisco, watching on YouTube, we will continue. Sound on up in DC.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on this Monday. I'm Carol Masser along with Alex Steele. Jason Kelly is off this week. One of our most read stories has to do with Berkshire Hathaway and Warren Buffett because we got an update on the second quarter over the weekend. So we're going to break it down with our own Kat Cheglinski. That's coming up in just a moment. Let's get back, though, to your top business stories, some of the news after the close. Here is, once again, Charlie Powell.
Hi, thank you very much, Carol Master. Got to begin with that Uber-Lyft story. Uber Technologies and Lyft have been ordered to convert their California drivers from independent contractors to employees with benefits. It's an early loss in a court battle that the gig economy couldn't afford to lose. Uber After Hours trading now lower by about 2.9%. Crosstown San Francisco rival Lyft down by about 1.9%. Again, a story we're monitoring for you. The Dow, the S&P, NASDAQ turned out to be a mixed Monday. Back to work Monday. We had the Dow and the S&P both higher. NASDAQ had a losing day. Investors were selling off some of the high flyers that have driven the latest rally that almost pushed equities back to records. Crude oil rallied, dollar touching a one-week high. So here's where we ended the session. S&P up 9 at 33.60, up by 0.3%, bringing its year-to-date gain now to 4%. The Dow up 357, up 1.3%. NASDAQ down 42, a drop of 0.4%. 10-year was down 4/30 seconds with a yield of 0.57%. Gold down 0.5%, 20.26 the ounce, and West Texas Intermediate crude up 2%, 42.07 for a barrel of West Texas Intermediate crude. Marriott International swung to a loss as travel bans and social distancing efforts weighed heavily on the company's second quarter results. Economist Mark Zandi of Moody'sEconomy.com talked about jobs and travel this morning on Bloomberg Surveillance.
Business models are going to change. An example would be business travel. So, I have a couple hundred economists who work for me across the globe. My biggest expense is compensation, second is rent, and the third is travel before all this. But given the pandemic and given all the technological changes, we're not going back to the kind of travel we had before. And I suspect many businesses around the world are in the same positions.
Interesting, though, we had all of the hotel chains up today. In fact, the airlines rallied as well. One example, UAL up 9.4%, but back to the hotel stocks here. Marriott up 3.6%. Hilton was higher by 3%. Hyatt Hotels, ticker H, up today by 6.3%. Recapping, mixed day for equities. S&P up 9, up by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. Well, one stock and person on our radar is Berkshire Hathaway and the infamous Warren Buffett. My mom called him William Buffett yesterday. It was pretty funny. She did. It was cute. So we want to bring in more about the company and about the buyback and what they're going to do in the back half of the year. We're joined now by Bloomberg News finance reporter Kat Cheglinski on the second quarter earnings. So, Kat, what was your biggest takeaway from earnings? Was it the buyback? Was it how are these businesses actually going to grow in the back half of the year? What do you think?
I think it was definitely the capital allocation story here because at the start of the pandemic and even at his annual meeting in May, Buffett took a bit more of a cautious tone towards this situation, saying that at the time his record cash pile probably wasn't that high when you consider the worst case possibilities for this scenario. So to see him at least spend a record $5.1 billion buying his own stock back, even if it was in the same quarter in which he was a net seller of other companies' stocks, I think it still indicates to investors that he's willing to put money to work. He's just being very cautious about where he's going to put it to work.
Right. He's willing to put money to work in his own stock, right? But, I mean, this is somebody we just kind of look to, Kat, to be like, okay, where's he buying? What's he's interested in, right? I mean, we look to Warren Buffett and Berkshire Hathaway more broadly and his team to kind of get an idea of what they're finding interesting.
Agreed, and he is buying some stocks. I mean, we've seen in recent weeks he bought Bank of America stock, but even then, that's a bank that he's been invested in for a long time. And so I think if you're trying to parse, how he's feeling about this situation, I think he's sticking close to home. He's sticking on these bets that he really knows well, whether it's his own company or Bank of America and some natural gas assets, which he obviously knows the energy space pretty well. So I think he's being a bit careful about what he's doing nowadays.
And I guess I just wonder, in order to move a needle, if that's
that is so big, do you need a M&A deal that is even bigger? Which raises, I mean, he's done the one-off deals, right? Like, I obviously follow Occidental, being the oil company. He got a great deal with that in terms of what the preferred stock, et cetera, and dividend. But then what? I mean, we're still waiting for that transformational big deal.
Agreed. And honestly, one of the more interesting parts, too, in the second quarter earnings is that one of his last really major transformational deals was Precision Castparts. It makes a lot of parts for aircraft, and that business has been hit really hard by this pandemic, to the extent that they had to take a $10 billion charge in the quarter on that business. And they even warned that, you know, in their judgment, the recovery of this market might really just depend on any vaccine or widespread distribution of medicine. So, you know, I think Berkshire's always on the hunt. I mean, they have a record $147 billion in cash to put to work if they want to. But I think they have to be careful. I mean, you know, different markets are being completely upended by this pandemic.
What I love about this, Kat, in your story, I mean, you go through just the different moving parts that is the Berkshire universe, but you talk about Apple specifically, its largest common stock bet, and you say it ended the quarter at $91.5 billion, so it was about 44% of the company's stock portfolio. I feel like the old Warren Buffett would maybe not have done that.
Totally.
Agreed. It's you know, it's heavily concentrated in Apple, and if you think about it, he only really started buying that stock in 2016. Yeah. So you know, he bought it after everyone knew well what Apple was and how well it was doing. He kind of bought it late, but if you think about it, I mean, it's become a huge bet for him, to the extent that if you're saying, you know, Warren Buffett wants an elephant-sized acquisition, I mean, this is at least an elephant-sized bet that he's created.
Right.
What's interesting, though, I wonder how you guys look at it, too, is that there's no, like, I'm going to bet in Goldman Sachs thing, like we saw at the financial crisis, right? There's no, like, super good deal he gets by going in and saving everybody this time around.
That's a good point.
Well, and it's most interesting because at the annual meeting, he actually explained that, you know, before the Federal Reserve started intervening in the markets in March, they were actually getting some calls. I mean, it wasn't really attractive deals, but it was at least people reaching out to Buffett as kind of a lender of last resort. But then the Federal Reserve acted quite quickly. And if anything, liquidity has been, like, fairly okay. And I think that's where Buffett's kind of struggling, as he is a good lender of last resort, but if the Fed is stepping in before you, it becomes a little trickier.
Hey, Kat, really quickly, 25 seconds. What's missing? What did you want to know that you didn't get? Just quickly.
I want to know, so, and we'll get this later in the week, but he looks to have decreased his bets on banks, insurers, or any financial firms. And we don't know exactly what company that is, but we'll be getting the 13F later this week, potentially by Friday afternoon. So I'll be curious to know what company he was kind of cutting his bet on.
All right, and we'll look forward to that as we look forward to your reporting always, Kat. Hey, thank you so much. Kat Chuklinski, she's finance reporter at Bloomberg News, joining us on the phone on this Monday. And, you know, Berkshire, it's always a great story, but it is interesting to see kind of what it's become, Alex, you know, and what it used to be.
And how it's going to change when he no longer runs it.
That's a good point. All right, we'll be watching, that's for sure. All right, let's get back to World and National News headlines. Let's bring in once again Ed Baxter in San Francisco. Hi, Ed.
Hi, Carol. Gotcha. It looks as if the Trump administration may have some wiggle room in relief negotiations. Treasury Secretary Steven Mnuchin.
We're prepared to put more money on the table. So where there are things, as I said, that made sense to compromise, we've compromised. So we're not stuck at the $1 trillion, but we're not going to go to unlimited amounts of money.
Now, California Governor Gavin Newsom says the lack of relief in the executive order put in place over the weekend leaves states in a terrible place.
But the reality of reprogramming that system from $600 down to $400, coming up with an identifiable fund source, eliminating the benefits to those that receive over $100 or less than $100 a week, all of those burdens would create time delays and would create enormous consternation.
Meanwhile, he says he's waiting for data systems to catch up with the number of tests done, but that the trends look favorable. And Bloomberg's chief Washington correspondent, Kevin Cirilli, says, wow, this whole battle sets up some interesting political maneuvering.
There could be a fight on infrastructure, another round of fiscal stimulus before Election Day. In addition to that, there's a looming battle about pharmaceutical companies. Whether or not the timing of that, if that's going to be before or after the election, I think is dependent upon when vaccinations get into development.
Another story, with hundreds of thousands of people in the tri-state area still without power, New York Governor Andrew Cuomo says he can take Con Ed's franchise right away.
It's not an excuse to say, oh, well, everyone was stressed and the mutual aid system was stretched thin. We know that's going to happen. It is inevitable. And that's what they're supposed to be prepared for.
Global News, 24 hours a day in San Francisco. I'm Ed Baxter.
All right, Ed, thank you so much. I'm already going to say, Alex, that this is a story I'll put out on Twitter or go to Bloomberg.com because I know we can't read kind of everything that went back and forth, but it has
But you have to read it.
But you have to read it. I laugh kind of out of pain here. It talks about sexism basically at Barclays. And I gotta say that it's also just a reminder within the financial community and often the world of banking that it's very hard for women to exist and kind of work their way up, if you will. But this specifically gets into what's being revealed in a lawsuit that's going on right now and talking about one specific financier, Amanda Stavely, who was at Barclays, and some of the conversations from some of her male colleagues and what was said about her.
Yeah, so, things referring to her as a tart or a dolly bird, so pretty but no brains, a foxy blonde. And this was back in 2008, right? And they have the recordings and the whole thing. But, to think that it's not happening now is ridiculous. Like, of course it is. Maybe you're just not saying it on a recorded phone call, but I have, anecdotal stories of my own experiences being a journalist covering the oil industry, which is male-dominated, on Wall Street. This is yeah. Let's not be surprised because this is par for the course.
Well, exactly. And don't you feel like this year, and I mean, certainly the last couple of years with Me Too, but, all of this is coming out and it's not like, oh my God, I didn't know this was going on. It's been going on for a long time. We talk about it when it comes to diversity and Blacks, certainly within the financial and banking and Wall Street communities. I mean, there's been some great reporting over the last couple of months. But I have to say, some of the stuff, though, that was said, I mean, this goes
really
on,
bad.
But it's really, really bad. And here's somebody who was really prominent. She is suing Barclays for about $2.1 billion, saying the bank cheated her out of profits for bringing investors into deals that helped save the lender from UK nationalization. $2.1 billion is what she's suing for.
She did her job, and she got it done. And they were talking about who she was sleeping with. Read the article. It's amazing, and it'll give you an insight into our lives.
Yeah, exactly. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.